Germany passes through the deepest part of economic collapse. Germany has passed through the deepest part of the economic through brought on by the coronavirus pandemic, the country's economic ministry said on Monday, with activity increasing but capacity still underutilized. The country's key manufacturing industry increased production by 10.3% in May, month on month, driven particularly by automotive production and component, with further improvements expected for June. The data points to industrial production having bottomed out and starting to rebound, Germany's Federal Ministry of Economics and Technology, BMWi, said, after a downturn that significantly predated the pandemic and chilled conditions in wider eurozone manufacturing since the second half of 2019. Stronger order books point to production increasing over the next few months, but risks still remain in terms of infection rates elsewhere, in turn hitting demand growth from non-EU countries. Exports rose in May, but Germany is unlikely to return to economic growth before the third quarter, even if there are no further shocks, according to the ministry. Several key trading partners, including the US and the UK, remain embattled by the spread of the coronavirus, with demand recovering in those regions slower than from countries such as China. Exports remain at around 75% of levels before an onset of the pandemic. The return of the automotive sector to production after essentially coming to a halt in April is the key driver of thawing industrial production, with the construction sector expanding at a modest 0.5%. Unemployment is also expected to rise in June, but at a more moderate level than seen in preceding months, increasing by 69,000 people compared to 372,000 and 237,000 in April and May. Real output in the EU is only expected to return to pre-COVID levels in 2022, according to data from the International Monetary Fund on Monday, a pace that could accelerate if a vaccine is found quickly or drag longer in the event of significant new waves of infection still feared for the winter flu season. Central bank policy should continue to be targeted at calming markets and ensure that credit continues to flow to businesses, which could involve further stimulus measures. This means policy rates must remain at extraordinary low levels for now, supported by net asset purchases that implicitly look to bond spreads and issuance volumes, Thompson added.
Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.